Welcome to this brand new episode of FinMet Mondays. It's a beautiful Sunday morning, and joining me is Mr. Sunil Kashyap. Sunil, great to have you back on the podcast, and for the first time in flesh. We've been seeing a lot of volatility, a lot of corrections in the gold markets. A lot of jewelers whom I'm in touch with are saying that what they're really interested to know is how interest rate policy in the US is going to shape up. We have a blackout period from now to May 2nd when the next interest rate decision is going to be made. But more from a longer term perspective, how do you think the Fed is actually planning to play out their interest rate policy?
Yeah, I mean, obviously, the experts are all over the place in terms of the range. But typically, what I found is people who are well regarded in the market have a general view, consensus view that the Fed is very close to stopping any further hikes. Maybe there'll be one. There's some talk about the second, but they'll probably pause for some time to see whether the impact of the rate rises has taken place on inflation, because inflation is coming down, but it's still very high compared to the 2% level that the Fed is looking for. So I don't see them reducing rates so in a hurry, but at least they'll pause to wait and see the impact, because the impact is being felt in the economy. We saw that with the banking crisis, etc. So it's now a matter of just seeing those things through and seeing whether inflation will eventually start coming down.
Dealers and jewelers are finding it very difficult to work with the inventory because gold has been trading at such elevated levels. It's just the markets have just been so dry. There's not a lot of movement and activity happening on the ground. How have they been really working through this entire environment?
I think it's two different segments in the market. If you look at the bullion traders, the people and the banks who depend upon imported gold to do their business, I think that they clearly has come down to zero, because discounts are at $10, $20 to the international landed cost. So clearly that segment has been impacted. The imports have been impacted dramatically. However, if you talk to jewelers, and especially getting into Akshat Tritiya now, the mood is still quite bullish. However, what is happening is that people are not buying new gold. They
Hmm.
find that the price is too high, and so they're trying to draw down on any old gold that they have and recycling it for new jewelry. So that's what's happening, rather than putting money to buy gold at 65,000 or 70,000 levels, which is not happening right now.
Thanks, Sunil.
That's
I
right.
think it's an interesting next few days, given that we have a complete blackout period from the Fed. There's still a lot of uncertainty in the markets, and we don't really know how gold is going to shape up in the near term. FinMet's view, definitely from the long term, and this is something that we've communicated always, is that long term, we're definitely very bullish on gold because a lot of factors definitely support the metal. We're going to catch up again next week. Until then, goodbye and see you again.
Thanks. Nice being here.